Right. Don't put taxes up, simply introduce sovereign money, control immigration, more tax equals less jobs, says pro-Europe, no to EU. And somebody else says, ask your markets guy about the demographic cliff. Well, I will, once we've asked him about what on earth is going on in the stock markets. First, that economic guy is economist, wealth manager, Jonathan Davis, who joins us now. Hi, Jonathan.
Hello, John.
Hello, mate. Thanks for coming on then. Well, you did predict this several weeks ago here on Talk to Me Radio. I guess it gives you no pleasure in seeing it come true. And what indeed is happening, my friend?
It's been going on for years. The reality is that in 2008, the biggest collapse in economic history, nothing was resolved when they bailed out the banks and they slashed interest rates. In the UK, it went from 5% to 0.5%, and of course it stayed there for 7 years. And what that did was bought a bit of time. It didn't resolve the great malaise in the Western economy, the global economy. It just bought time. And we're now at the end game. They've been pushing on a string for, in fact, the last 2 or 3 years. Or to use another metaphor, the elastic is so stretched that it is now snapping back.
So we've had all this austerity and it's done sweet FA, effectively. Is that what you're saying?
What austerity? 70% of government spending was ring-fenced going into the 2015 election. Health, defence, overseas aid.
Don't get me started.
Pensions, 70% of government spending was not going to be touched. It's only the 30% that's been affected. Overall spending is up.
So the bottom line is George Osborne now has definitely got his sums wrong with this all happening, and we are going to end up with this £3 billion hole. Is that right?
Oh, there's going to be a multi-billion pound hole. 3 billion is just a start. Basically, politicians have been lying to us for decades. They've been promising us more than they can actually deliver. So, it's all very well that they didn't raise taxes. So what did they do? They raised borrowings. So instead of you and me paying for it all, our kids are paying for it. And they'll be paying for it in the form of lower pensions, lower Social Security, lower health spending, and higher taxes. It's almost inevitable because the maths don't lie. As I say, all they did was bought an extra few years in order, right across the world, not just in the UK, in order to get re-elected, because that's what democratic politics is all about. You lie through your teeth. Okay?
What if Labour had got elected with their plan? Would it have still gone tits up?
Oh, absolutely. But you have to, the point I want to make is, strange as it may seem, I don't actually, well, okay, maybe with Corbyn, but not with Miliband, I didn't see much difference between the just left of centre and just right of centre. In fact, there was literally a 1 or 2% difference in their spending expectations. Not much difference.
Okay, and does it go back, Jonathan, I mean, I'm no expert, you are, to the fact that the banks caused the problem? The banks have all been bailed out, haven't they? Either had the toxic debt got rid of and just disappeared, but they seem to have rebuilt their balance sheets, but the rest of us are skint. Is that too naive, the way I'm describing that?
No, that is, putting it in layman's language, that is exactly what has happened. The people in the UK, in the US, in Canada, in Europe, in Australia, you name it, we borrowed thousands of billions of pounds, euros, dollars, whatever, and we handed it to the failed businesses, the banks, and instantly they handed out billions and billions and billions of bonuses. Had those banks been allowed to go bust, they said it would have been the end of Western civilization as we know it. I, and people like me, say, no, it wouldn't. It would certainly have made a great change, but if I just finish, it would have allowed the cost of running businesses and the cost of living to plummet, and from there we could get going again. Instead, we're at the end game, and we're on the point of possibly, I hate to say this, but it's true, entering into an economic depression.
I want to talk about that in a moment. And you say they had a choice, they decided not to take the route that you say, and you say all of this as an out-and-out, 100% snap me in half like a stick of Blackpool rock, I am a capitalist.
Oh, absolutely.
Okay.
Capitalism without bankruptcy is like Christianity without hell. We didn't let these failed businesses, reckless lenders, go bust when we should have done.
Okay.
But, blame the bankers as much as we like. It's the politicians who we should put the opprobrium on, because they are the policymakers. They're the ones who decided that they didn't want to lose votes in the coming elections. Gordon Brown bailed out the banks. Barack Obama across the water bailed out the banks. Interesting, both left of centre politicians.
What's interesting
the
then?
Socialists bailed out the bankers. Think on that.
How's it going to affect me and you and my listeners then? The Times are saying petrol will rise. I think it's the Telegraph are saying taxes will have to rise because there is this deficit. Let's talk about that first, then let's talk about what you think this major recession or depression is going to be like.
Well, look, remarkable as it is, George Osborne, a Conservative Chancellor, has borrowed more than Gordon Brown. I'll let that sink in for a second. Isn't that remarkable?
Yeah.
And it's purely for politics, because obviously, if you don't raise the taxes because you're economically bankrupt, you have to raise the borrowing. You have no alternative, otherwise the maths don't add up. So they've raised the borrowing, which in the relatively short term has been okay, because interest rates are so low. So of course the state can finance the interest on the borrowings. But we're now at the point where even the governments around the world are finding it more and more difficult to borrow. Countries are going belly up. You may not think it's important, but it is. You've got some Far Eastern countries, you've got Latin American countries, you've got Russia, you've got Middle Eastern countries whose currencies have absolutely collapsed. The Russian ruble is down 70%, for example. So, of course, when you get to the level that the state economics are up the creek, then, of course, that's going to affect the global economy. Where are we now? Well, where are we now is that the stock market has finally woken up to the realities.
Yeah.
And since, in fact, it's not just happened the last few weeks. I've been writing about this for the last couple of years, and increasingly so for the last year or so. Since the spring or summer of last year, stock markets right around the world peaked, and you could name practically any of the major markets, and they're all down 20 or 25%. Now, some of your listeners will say, well, that's not much. They went up 150%. Well, yes, but if you think of the arithmetic, to go from 100 to 250 is 150%, but if you then go down 25%, it's 25% of 150. It's a bigger number.
I understand.
And we are clearly in what's called a bear market, a downtrend. Bull market is an uptrend.
Yeah.
And although we may, as it happens, see some stability for some weeks, because, after 25% fall, nothing goes in a straight line, you can expect that what we've seen is the first leg in a major crash in the stock markets, and that, of course, affects people's pensions, their retirement security, their investment funds in their ISAs, if they've got stocks and shares ISAs, and so on. So it does affect real people. And why do stock markets fall? Because the global economy is going backwards. we are heading towards another global recession.
Worse than
like
it was
2008.
Is it going to be worse than 2008?
It's hard to tell, but it seems it's going to be at least as bad, at least as big.
Right.
When I look at something, for example, like the share prices of the major global level banks, Goldman Sachs, JP Morgan, Deutsche Bank, Royal Bank of Scotland, you name it, the biggest banks in the world, their share prices are collapsing. This is no exaggeration, and this is the point. It's very similar to what we saw in the global banking collapse of 2008.
Okay.
Now, I reiterate, it looks like we've seen the first leg down. There may be a spring of relative calm, but in the second half of the year, I wouldn't be surprised to see another shoe to drop. Something like Lehman's and AIG in 2008, Deutsche Bank, the biggest bank in Europe, the share price is lower than the lows of 2008, 2009. Think about that. After 7 years of bailing out the banks, the share price of Deutsche Bank is lower than the lows of the Depression in 2008.
It's almost criminal, isn't it, Jonathan?
Something's afoot.
Yeah, it's almost criminal when you describe it like that. It's almost criminal.
It's not almost criminal. I've been very vocal. That there have been clear and proven criminal acts by the big banks. LIBOR scandal, for one.
And the swaps. What about the swaps? What are we doing?
That was the second
with
example.
Unsophisticated borrowers, as they describe them, as they ripped them off for millions. And these are bankers. They're still in their jobs, man.
Not only are in their jobs, they haven't been prosecuted. They're still getting their £1 million bonuses. It's hard to believe, but I'll tell you what, the mafia has got nothing on these guys, and the politicians have allowed this to happen.
Okay, I've got to stop you there, but just a word of advice to the listeners. What do we do? What can we do?
You should, over the next few weeks, couple of months, you should be sitting down with your financial advisors, wealth managers. If you've got pensions and stocks and shares ISAs, you should be saying, look, if in the second half of the year, stocks and corporate bonds, which I know lots of people have got lots of them, if they are going to fall another 20 or 30%, like what happened in 2008, what do I need to do? Where do I need to put my money to ensure that that doesn't happen to me? That's what they need to do. They need to sit down with the financial advisors.
Thank you for cheering me up. Been great talking to you, as per usual, Jonathan. We'll speak again very, very soon. Jonathan?
Great, yeah, definitely. Look forward to it.
Cheers, my friend. Jonathan Davis, economist and wealth manager. Brilliant